What we're seeing from types of firms saw continued significant adoption from hedge funds. Most of the world's largest hedge funds are now significant holders of hundreds of millions or billions of dollars of Bitcoin ETFs. We saw continued adoption by endowments and pensions, state of Wisconsin dialing up their allocation. And of course, we saw a sovereign wealth fund from Abu Dhabi put nearly $500 million into Bitcoin ETFs. I would call it just an extraordinary quarter for Bitcoin ETFs in terms of marching down the pathway towards institutional adoption.
Hougan sees crypto evolving into a full-fledged institutional asset class with the same breadth of financial products available for traditional assets like stocks, bonds, and real estate. This means more variety, more sophisticated investment tools, and deeper integration into global financial portfolios. One of the biggest trends in 2024 has been the sharp rise in institutional involvement in Bitcoin ETF. The share of Bitcoin ETF assets held by institutions jumped from 17% to 28% in recent quarters, a significant increase that underscores growing confidence in digital assets. Hedge funds, endowments, pension funds, and even sovereign wealth funds have stepped up their Bitcoin investments.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
You know, a lot of people wrote off the Ethereum ETFs when they first launched because they had a very slow launch. You know, crypto in general is maybe short-term bearish on Ethereum, but that's not what you see in the 13F filings. And it's not what you see in recent flows. Just like Bitcoin ETFs, the share of assets captured by the 13Fs is going up. We see some of the same names, some hedge fund-like exposure, but we also see significant adoption from financial advisors and others in those filings. So again, I was left in a very bullish state of mind. So I think they are getting very close to opening the gates. We're also seeing many of the people who bought Bitcoin ETFs in 2024 doubling down on this space. When I look at the flows, I'm actually extremely optimistic. You know, I think we're on track to top 2024's flows. I think once those national account platforms do approve these ETF for solicited sale, I think it's going to accelerate it. I wouldn't be surprised if we ended the year above $50 billion in flows. I think it's really just a matter of time. You know how the ETF innovation machine goes. It knows no ends. So we're going to see everything, right? People are trying to enhance the existing Bitcoin and Ethereum ETFs through staking and in-kind creations. Those will make those more attractive products. They're trying to launch new individual crypto assets. They're trying to uplist index-based exposure. You mentioned option strategies that generate income. We're seeing buffered yield. I think the way to think of this is crypto is really emerging as an institutional asset class. And it's going to have all the bells and whistles of any other institutional asset class. Long only, long short, covered call, buffered exposure. And people are going to be able to integrate Bitcoin into their portfolios the same way they do stocks, bonds, real estate, and commodities. So we're in this new era of crypto ETPs, and we're going to get dozens of filings and dozens of launches throughout this year with every possible flavor of sort of financial exposure you can think of. I think the biggest story was a lot of institutions bought in. You know, one question we had was whether the change in administration, the November elections would make it easier for institutions to move into the crypto space. And the 13F filing said that dramatically, right? The share of Bitcoin ETF AUM captured by those filings, so the share of institutional investment in the Bitcoin ETFs went from about 17 to 28%, a huge uptick. And I think that's going higher. What we're seeing from types of firms saw continued significant adoption from hedge funds. Most of the world's largest hedge funds are now significant holders of hundreds of millions or billions of dollars of Bitcoin ETFs. We saw continued adoption by endowments and pensions, state of Wisconsin dialing up their allocation. And of course, we saw a sovereign wealth fund from Abu Dhabi put nearly $500 million into Bitcoin ETFs. I would call it just an extraordinary quarter for Bitcoin ETFs in terms of marching down the pathway towards institutional adoption. You have to think about what that bulletin, SAB 121, said. It said that crypto was kryptonite, that literally if you touched it, you were going to die as a bank. And now that's been removed. They can integrate with it. They can use it for custody. They can use it for prime brokerage. It's absolutely the case that many major Wall Street firms want in on the crypto boom. They see the money being made here from a custodial and trading perspective. And I think they're going to start moving in Q1, and that's going to accelerate, through the rest of the year. One, I think there's substantial demand for an XRP ETF. XRP has had a sustained community for an extremely long period of time. It's an asset that trades significantly on centralized exchanges. I think people would love to find a way to hold it in a simple, low cost, easy to use ETP structure. And I will say the second piece is the SEC is much more receptive to discussions under the new administration than they were in the past. In the previous administration, the door would simply be shut. There was no way to discuss things like staking or in-kind or maybe new assets. I think, and I can tell you that has completely changed. They're much more open to dialogue. So I'm optimistic we're going to see, XRP ETFs, Solana ETFs. I think the killer app in this space will actually be an index-based ETF. I think a lot of people want to just make a generalized bet on crypto, and I'm hopeful we get that at the end of this year as well. So count me as optimistic.
Hougan points out that consumer inflation expectations have become highly politicized, leading to distorted survey data. The University of Michigan's inflation survey, for example, reflects extreme shifts based on political affiliation, making it less reliable as an indicator for Federal Reserve policy decisions. Looking ahead, Hougan sees potential for the Fed to cut interest rates sooner than expected, which could provide a tailwind for risk assets like stocks and crypto. With markets pricing in fewer cuts than before, any unexpected easing by the Fed could serve as a bullish catalyst.
It's a couple things, but I'd say what really stands out to us is that the market has eluded extended periods of weakness because investors are bearish at the highs at a time when there's record cash on the sidelines. So to us, this is a market that is very skeptical of these new highs. That bearishness and concerns about tariffs means there's a wall of worry. So I think this is actually a very positive setup for stocks. Inflation expectation surveys matter to the Fed because they're concerned about whether or not consumers are actually raising their inflation expectations, and that would in fact be bad. But we have to keep in mind the UMich surveys do seem to be polluted by political affiliation. When you break down respondents by Democratic responses, they've gone from seeing inflation under 2% before the election to over 5% today. Republican respondents have gone from 4% to basically zero. In fact, if you look at the distribution of responses for those Democratic respondents, almost 7% think inflation is currently at 25%. So I think that there is a lot of pollution in that data, and I think it's probably pretty typical what happens when there is a change in administration, but I hope the Fed is aware of that political dynamic. It certainly seems like it. I mean, I think investors can cite a lot of things top of mind why short term they're expecting the turbulence. We're coming off two back-to-back 20% years. We know there's significant uncertainty about tariffs. In our latest client survey, 63% of our clients, and that's over almost 2,000 respondents, said tariffs or deportations is the biggest risk. That's up from 54% last month. But these are not things that have necessarily long-term negative effects. In fact, things like the number of Fed cuts is actually back towards 2. And I think there's a possibility the Fed may actually make cuts sooner. I think one thing the market is being complacent on is thinking the Fed's on hold. But if this turbulence causes hiring to slow, I actually think the Fed could actually be making cuts a lot sooner, which would be positive for stocks. Investors really want to own stocks that actually have structural advantages, and that's best evidenced by revenue growth, margin expansion, earnings growth, and reasonable prices. So the reason growth stocks will still outperform is that in a period like this, if we have macro uncertainty, they're going to be names with some visibility. It's not pleasant to own a growth stock today, but we know the lesson of 2025 is that these pullbacks have not been deep and investors have been buying these dips. So I don't think today is any different. In fact, it's no different than the DeepSeek panic or the tariff day panic or the CPI panic. So, I think this is going to be a buying opportunity.
We had a brief altcoin season, didn't we? November, December. And now the altcoin drawdown, roughly 35%, is the biggest post-election correction for altcoins that we've seen in the last two elections. I think part of that has to do with Ethereum specifically, which has been underperforming, and there are some legitimate questions about the roadmap for Ethereum going forward. And then a lot of it has to do with oversupply of tokens, right? So the altcoins have become victims of their own success. It's so easy to create a new meme coin these days. Nearly 400,000 have been created monthly over the past couple months. And that new supply is just soaking up a lot of the dollars that might have gone into a smaller universe of coins. I still think that these kind of layer one tokens like ETH and Solana, and there's a handful of others, have performed reasonably well on a volatility adjusted basis. This is part of the market where you can still stake your coins and earn a rate of return that in some cases exceeds the inflation rate for some of these projects. So still pretty optimistic that the L1 ecosystem will work relative to Bitcoin when we look back on 2025. But there is a long tail of applications, infrastructure, meme coins with unattractive tokenomics and oversupply. And we've always believed that 99% of these coins are not going to have enduring value.
The altcoin market has experienced significant turbulence following a brief rally in late 2023. Hougan notes that Ethereum has underperformed partly due to concerns about its long-term roadmap. Additionally, an oversupply of new tokens, particularly meme coins, has contributed to downward pressure on altcoin prices. Over the past few months, nearly 400,000 new meme coins have been created monthly, diluting capital that might have otherwise flowed into established projects. Despite these challenges, Hougan remains optimistic about select Layer 1 blockchains like Ethereum and Solana. Please like and subscribe.